The American Conservative Values Fund is an investment alternative for politically conservative investors who are looking for shareholder returns. And with me is Bill Flaig, the founder and CEO of ACVF. Did you create it, and why did you create this fund?
Yes. Well, first, thank you for having me on the program. And I've got my partner and I have over 25 years experience in ETF and mutual funds on the investment management side of things. And as we've seen the industry grow and our experience grow, we've seen thematic ETFs, ESG-oriented funds, but we didn't see anything growing that spoke to our values, that spoke to our value set. So we set off to create this American Conservative Values ETF 3 years ago, and we're really pleased with the results so far. To date, we beat the S&P 500 slightly in the 3 years, and we just got a Morningstar 4-star rating.
Wow. I mean, that's really good. And beating the S&P 500 is an accomplishment.
Yes.
Not a lot of funds do that.
Yes. We're not creating an expectation that we'll always outperform the S&P 500. We're just trying to provide a diversified portfolio with conservative values.
What is your investment thesis? How do you pick these companies?
The thesis is, and we're getting more and more validation of it, I suppose, is that companies that engage in political speech or deviate from maximizing shareholder value are, hurting the investors. Stakeholder value is sometimes called. So companies that are really focused on ESG or stakeholder value and at the expense of shareholders, we're trying to avoid those companies. So we have principal boycotts of 34 companies now, which represent about 25% of the S&P 500. So we exclude from the diversified portfolio the companies that we think are the most egregious towards conservative values.
Well, and we have seen a lot of politically motivated companies doing things and getting involved. And I've kind of wondered over the past few years, how is this going to turn out? Because it seems like you're alienating 50% of your customer base.
Yes. And that's, to me, and a lot of everyone, when they think about it, it's very alienating to do political speech. Either way, you're going to lose customers, you're going to upset employees. So there's, some businesses are built around, liberal values, and that's fine. But for anybody who's just got a regular business, it's dangerous to
we see
political
Target
speech.
And Bud Light, and there's been a lot lately.
Disney.
Disney is another one. So will your approach sacrifice performance at all?
It hasn't to date, as I said, and the portfolio, we build it to be diversified. We have all the sector exposure. It's a blend portfolio. It doesn't go towards value or growth. So the expectation is that it should be comfortable being an S&P 500 index replacement in the core part of the portfolio.
How do you decide which companies to boycott?
It's a qualitative decision. It's an actively managed fund. We are focused on issues that are resonating in the political community. Right now, since we've launched, I say most of our focus has been on companies that are suppressing conservative voices or denying conservatives access to their products. So debanking, deplatforming, social media, algorithms skewing against conservatives. That's been our main focus. But obviously, sanctity of life is important, as well as just liberal corporate activism.
Yeah, no, it's kind of shocking what's been happening in some of the corporations. How does boycotting their stock hurt the company?
It's a good question. And I mean, as consumers, we have power in the products we purchase, and which I think we're familiar with. But we actually have power in not investing in the companies themselves. So the companies need capital. One of the ways they get capital is the stock market. So by divesting the companies with enough size, it could drive the price down, affect the managers in their paycheck. I mean, I think Disney 18 months ago is a great example. There was such outrage over what was going on with them at the time. Their stock went down, I think, like 32%, and the CEO lost his job and was replaced with a new CEO. So I think that Disney is a good example of the power of, the marketplace to change leadership in a company. Yeah.
How can somebody find out more about the fund or invest in it? How does it fit into a portfolio?
It is intended to be a large cap core replacement, S&P 500, Russell 1000. I think a lot of people in their 401ks and IRAs, they own mutual funds that they'd be shocked with what they own. They are essentially owning, BlackRock, Disney, Starbucks, Google, Amazon, these companies, and they don't even know it. So there are options out there. They don't have to just blindly or begrudgingly invest in those portfolios.
Can somebody buy the fund directly from your website?
No, it has to be purchased in a brokerage account.
Okay.
And the ticker symbol, as you mentioned earlier, is ACVF, American Conservative Values Fund. If anybody types that into their software or search engine, it'll pull up information
Come
about
up
it.
Just like a stock will.
Yes,
so,
exactly.
well, Bill, thank you so much. Very interesting.
Thank you. Thank you
Thanks.
for having me again.